please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. This is Power Breakfast. Staying with the earnings, Adani Ports is what we spoke about just before the break. Now let's talk about Adani Power. They also reported their fourth quarter numbers. Anisha, give us the details on that one.
Well, I have my doubts about the numbers, Manglam, and how the stock will react today, because the revenue, of course, is down around 36%. We did expect partly that because, as I mentioned earlier as well, Mundra power plant was shut for 2 out of the 3 months, and it is expected to remain shut down till the time the deadlock is, really solved between the government as far as Adani Power is concerned. But other than that, the only glimmer of hope in the number is the margin number, because that has come in better at 32% versus 21% reported last year. Now, it is partly because the fuel cost as a percentage of revenue has really declined, and that's the reason we are seeing that bump up in the margins. The losses optically look a lot better in terms of just loss of around 670 crores versus 5,000 crore loss reported last year. But do remember there was an exceptional loss of around 4,200 crore that was reported last year, and that's why this looks a lot better. Other than that, yes, the finance cost has also come down to 1,300 crores versus 1,600 crore reported last year. Talking about balance sheet, because that remains important for Adani Power, the consolidated long-term borrowings are a tad bit lower, though the short-term borrowings have gone up. So it's pretty much balanced as far as that is concerned. A few important statements coming in from the management. On Mundra, they still say discussions are in exploratory stage, and that is what my concern is, because if they're still at exploratory stage, and the management has clearly said that till the time deadlock is not really resolved, they will not start the power plant again. Other than that, an important point, auditors have issued a modified report. They have given a few qualifications. Now, a lot of them are not first-time qualifications, but they do talk about the compensation that they have accounted for on account of force majeure. They talk about receivables that they have already accounted for, which were before acquisition of assets. And they also caveat their report talking about the acquisition of Korba plant. So I see more red than green actually when it comes to Adani Power, Manglam.
Okay, more red than green. And what do you make of JSW Energy?
Well, there's not much improvement coming as far as number is concerned. They continue to disappoint, because the revenue came in at 1,700 odd crores versus our expectation of 2,000 crores. The margins also came just at 24% versus our expectation of 29%. As a result, the loss at 480 crores versus 60 crores. Now, of course, in terms of the loss, there is a one-time provision that they have made in regards to the JP Power Ventures deal of 570 crores. But strip that off, if you look at the adjusted profit as well, that is way below expectations and what Street was expecting, because they were working with the profit and the adjusted number is still a loss. Now, to just run you through the other details, the average realization is down by 11%. Now, Manglam, we have been talking about the merchant power prices going up, but that is not what is reflecting in the numbers, and that's a pain point. Other than that, just keep an eye out on what the management say regarding the recoverability of the JPVL asset, as well as the fact that they have increased their capex regarding the EV business to 6,500 crores doesn't seem to be going well with the brokerages.
Okay, fine. Let's also listen into what the management of the company had to say on these numbers.
Out of the 1,000 crore, we had pending 752 crores. Of that, 584 crores have been provided for, and balance money is recoverable based on the various cases at tariff order which are pending and which will be adjudicated, and we believe that we will recover that. And for the entire recovery, we are taking a legal opinion, and then we are working to take a legal recourse to take the JPVL into NCLT. Total capital expenditure we are planning is 6,500 crore for the EV business, of which 1,000 crore will be in the FY19. And in case of solar, we are contemplating 1,200 crore capital expenditure for 200 megawatt of the solar power plants, which will be both for the rooftop as well as the floating solar. And we are also setting up a 1,000 megawatt solar PV panel manufacturing facility, which will be commissioned in the FY19.
Okay, talking about some more earnings then. Castrol's Q1 earnings were a mild miss. Rise in input costs actually impacted the margins for the company this quarter. Sonia is here with the key highlights from this quarter numbers. Sonia, good morning. Take it away.
Hi, thanks a lot for that. You know, it was an unimpressive quarter for Castrol. On all fronts, really, they were below what the street was expecting. There was hardly any growth this quarter for the company. On the volume front as well, you know, it was just a 2.5% volume growth that the company saw versus an expectation of 4% and versus a much much better quarter last time of double-digit growth. The rise in input costs have impacted their margins as well. They have spoken about how rise in crude prices is something that would impact them going forward too. They've undertaken a price hike in the month of January, but they don't know whether they can pass on more of the higher crude prices going ahead. So the numbers, revenue growth of just 5%. EBITDA was largely flat at 273 odd crores, and the profits hardly grew 1.1%. The management also spoke about how the two-wheeler segment has faltered this time around, while commercial vehicle segment has been strong. Back to you.
All right, thanks a lot for that, Sonia. Hexaware too reported its first quarter numbers. The revenues beat estimates while the margins were a slight miss. Rima?
Yes, that's a neat summary of how the Q4 numbers look. But more importantly, for the full year, the management continues to maintain their guidance on the revenues at 10 to 12%. Now, this analysts believe could be quite conservative because now the asking rate in Q2 to Q4 is only 2.2% to about 3.2%. And considering that Q2 and Q3 are seasonally strong quarters, the performance should be better than what we saw in Q1, which was a growth of 3.9%. So people believe, the analyst community believe that the company is likely to exceed their 10 to 12% guidance. And remember, even last year, they started the year guiding for 10 to 12%, but ended with more than a 15% growth. A quick run through of the numbers then. Dollar revenue growth at 3.9%, better than what the street was anticipating. Margins, as you correctly pointed out, slipped by 20 basis points to 14.1%. Profit growth is looking good at 18% sequential growth, aided by a forex gain. Volume growth has come in at 3.5%, while the constant currency growth is at 3.3%. If you look at the geographical mix, North America has been subdued, so that's seen a growth of only 0.7%. Growth has been led by Europe as well as Asia Pacific, which saw a growth of 7.3% and 24.6% respectively. But that seems to be a part of the company's strategy to focus more on Europe as well as Asia Pacific, where the growth rates appear to be higher. And anyway, earlier they had a very high dependence on America, which they were trying to get down. But on the whole, a good set of numbers. Investments in sales and marketing have dented their margins a tad bit, but on the sales front or revenue front, things are looking good for Hexaware.
Okay, Rima, thank you so much for that. But it is time now for a quick break. Up next, we'll get you a check on the cues to watch in the futures and options space. Welcome back. You're watching Power Breakfast on CNBC TV18. Let's talk about some more earnings then. Vedanta reported numbers yesterday. Nigel, it looked like the power business is what really supported the earnings?
Well, actually, it's the aluminium business as well. You know, it's the aluminium business as well as the power business that did very well. To just run you through the brief numbers, producer just, director just firing all those numbers. That's basically the consolidated numbers. But for Vedanta, the most important thing is the segmental breakup. Besides the numbers, in the last 1 year odd, they've paid a decent amount of their debt back as well, close to 8,500 crores. And now the debt has come down to around 60,000 crores or thereabouts. But we look at the EBITDA numbers and we look at it on a segmental basis. So let's focus on the aluminium business first. Over there, we did have an EBITDA number of around 1,300 crores. Remember, the street was working with a number of around 700 to around 800 crores. So that was a big beat, but there was close to around 350 crores of a one-off other income that was included in that. So even adjusted, it was at around 950 crores odd, which was better than the street was working with. Oil and gas business, remember, crude prices have surged up, so the average realization was higher. And the EBITDA number of around 1,509 crores odd, that's more or less in line with what the street was working with. The power business, the PLFs have been moving higher. Remember, there's a bit of a challenge in terms of sourcing some coal. But over there as well, the EBITDA number was at least around a 50 to around 100 crores beat in comparison to various brokerages. Moving to the other segments of the business, the zinc international business, a bit of a disappointment, though it's a smaller part of the business. Some part of the street was working with a number of around 300 to around 330 crores odd. They came with a number of around 259 crores. Why is that? Zinc prices, yes, they've surged up, but the cost of production as well did go up. So on the back of that, in fact, that was a bit of a miss. And the copper and the iron ore business was a bit of a miss. The copper business was a tad bit better. But going ahead, both those two, they have challenges because there will be shutdowns going ahead. Brokerages, though, they like these numbers. They're looking to play the long-term story. Edelweiss, they have a target price of around 410. They have tempered their estimates, and even Motilal Oswal, they as well maintain a buy rating. So overall positive. I think the stock should do well going ahead.
All right, Nigel, what about Ambuja Cement's long Friday evening maybe?
Hopefully not. It's going to be, I hope it's going to be not a very long Friday evening. But the numbers, I mean, if you want to look at a timing, I'm expecting it post lunchtime at least. So you keep your eye out on that front. Top line, we're looking at a growth of around 13%. Two factors are going to drive it. Higher volumes, higher realizations as well are going to come about. Sales volumes, working with a number of around 6.35 million tons. Capacity expansion in West Bengal, that's what's going to help them. That's why 6.35 million tons is what we're working with. Realizations as well. That's expected to come in higher. So we're working with a top line growth of around 13%. You're expecting volumes to go up by around 6%. The remainder should come in on the back of realizations. Remember, the other cement players, they as well have surprised positively in terms of the realization move. Margins, we're working with a bit of an expansion over there. That's because higher realizations should take care of any additional costs that are likely to come in. Remember, the petcoke price has moved up, so that's what will hurt them partly. And that's what will restrict any kind of big margin expansion over there. And other costs like diesel cost, you have freight cost as well will move higher. Profit number we're working with is roughly around 299 crores. We'll keep an eye out of these set of numbers. Maybe post 2:30 p.m. is when we could expect them.
Okay, Nigel, thank you so much for running us through the expectations. But let's just focus on commodities world. Manisha Gupta joins us with all the update from what's happening in the world of commodities. Manisha, good morning. Take it away.
Thank you so much for that. Well, we would want to start with the crude oil prices yet again, which has been quite volatile, and we saw some strength in the overnight markets. This is as the Iran nuclear accord nears, and Iran has issued a statement saying that it will not renegotiate, will not be bullied by US, and that has added some premium to prices. Also, if you look at the OPEC output, it has been the lowest since March 2017. So with the OPEC compliance on the higher side, the geopolitical concerns and the Iran sanction concerns building up, you will see that premium return in case of the crude oil prices before we end this weekend. Apart from that, if you look at the metals as a sector, we have seen some strength come in for that one. The China and the US talks on trade relations is underway. The dollar has come off its 4-month highs. So you have seen the copper prices go up to a 1-week highs. What hasn't done well really has been the zinc prices. That one is trading at an 8-month lows as industry agrees to a 15% drop in the annual zinc processing fees to nearly $147.
Right, Manisha, thanks a lot for that. Let's shift focus back to the equity space, the futures and options space. The SGX Nifty indicates a much deeper cut than what we saw at the start, down almost about 45-50 points as we speak. So that means there will be a bit of a pause at the open, whether that recovers or not, because if you take a look at the cash market flows, yesterday the FIIs and DIIs, both of them sold in the cash market. There was underperformance in the mid-cap space, but then the Nifty futures premium increased. There could be two reasons. One, there was buying. Secondly, ahead of the volatility, the big events, the wicks moved higher. So we'll keep an eye out on the options prices as well as the premium that one is paying for the futures. FIIs bought in index futures, a lot of purchase in index options, but that was because it was Nifty Bank weekly options expiry. We saw some action on the 10,900 call and the 10,400 put. Continues to be a stock-specific market. Now, two stocks which entered the F&O ban, Jet Airways, Just Dial. This is in addition to the two stocks which are already in F&O ban, IRB and PC Jewelers. We saw a lot of short additions on the likes of HCC, Indigo, HCL Tech, all of them underperformed in trade yesterday. Some open interest action on Manappuram, so that is one stock I'll be keeping out on. But remember, by and large, a stock-specific market.
Okay, it remains a stock-specific market. Thank you, Mangalam, for that. But that's all the time we had on Power Breakfast. From the team and myself, thank you so much for watching. Bazaar Morning Call comes up next.